Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. Our show today is brought to you by my company, Bull Realty. Look, we sell all kinds of properties, office, industrial, retail, all over the Southeast. And I get to talk to a lot of folks out there, and I want to thank you guys who are listeners to the show, watch the show, and loyal. I appreciate you working with us and sending us business. So I'm hope this show is helping everybody, and we appreciate the opportunity to work with you. And we have an interesting show today. Every year, Seyfarth Shaw is a big law firm, and they have a huge commercial real estate group. They have 13 offices just in the U.S. alone. They have 160 lawyers doing commercial real estate, and they do a survey of their clients, and they send it out to about 2,500 clients around the country and get their survey on what are they thinking about the market, what are they doing this year, and they get a lot of response from that and put out a report. Please welcome my guest. It's James O'Brien, and he's a partner with Seyfarth. James, good to see you. Thanks for joining us.
No problem, Michael. I'm glad to be here. Thanks for having us.
Yeah, and it's an interesting report. You guys been doing this for what 10 years, and I always enjoy kind of seeing the results. And we're going to hit some of the highlights of this today. And one thing I wanted to ask you before we get into it, when you look at the kind of the overall theme of the respondents and your take on this, what kind of jumped out to you as a theme?
Well, I think the overarching theme is optimism. I mean, we've asked this question about whether this is a year of opportunity or a year of retrenchment for 5 years consecutively. And this was the most optimistic that our respondents have been. 87% of them thought that this was a year of opportunity. It's somewhat similar to last year. I think last year was 83% thought it was a year of opportunity. But it's, of all the 5 years, this is the year that they were the most optimistic. So I think that's interesting. And, if I had to take a guess as to why that is, it's interesting. We don't specifically ask them, why they think it's a year of opportunity. We can read the tea leaves, if you will, and some of these other responses that they gave. But my guess is they're seeing improving fundamentals, essentially. I mean, if you look at it, the rate of inflation was something like 3.9% at the end of 2023, and it was down to 2.4% at the end of 2024. Interest rates have been cut by about 100 basis points over the last year. Job growth is still strong. Employment numbers are strong. So I think they're seeing positive market fundamentals. It's obviously an election year, and a real estate developer is in the White House, and I think that they think that the new administration is pro-growth as well, less regulation, lower taxes, for example. So I think they are an optimistic bunch for that reason.
Right, and your respondents are not all real positive brokers like me. Well, I'm a broker, I guess. Rah rah rah. It's always great, right?
Yeah.
But these are institutional groups that own and control these properties. A lot of your respondents, right?
That's right. Yeah. I mean, we have people that are, private equity real estate investors. We have people that are asset managers on behalf of institutional investors. We've got lenders. We do have some brokers. We also have managers of facilities for large Fortune 500 companies, for example.
Yeah. And James, you mentioned interest rates. So what do your respondents think about what interest rates might do ahead of us here?
Yeah, it's interesting. I think the numbers were, 67% think that we're going to have a 25 to 50 basis point decrease, which that makes sense because that's in line with what the Fed is forecasting. Interestingly, 34% of those respondents thought that it would only be a 25 basis point decrease, which is slightly under what the Fed is saying, and 22% think no change. But the majority, 67%, are clustered around a 25 to 50 point basis decrease. And we've already heard from the Fed that they're not lowering interest rates in March. So I think these are going to be more on the back end. Interestingly, when you looked at last year, the majority of them thought there would be a 26 to 50 point decrease. And in the end, we had 100 points. So they were pessimistic a little bit last year in terms of what actually bore out. So maybe that'll be true this year as well, but they're mostly in line with the Fed's guidance, 25 to 50 basis points decrease for the year.
Yeah. Well, it's also encouraging to see the 10-year come down a little bit as well recently, right?
That's right. Yeah, no, it's interesting. I was at a real estate roundtable event, and one of the CBRE economists was saying that just the data bears out that when the 10-year Treasury is over 4%, there's just fewer real estate transactions, maybe because that kind of crowds out the market. There's a nearly riskless investment that you can get for over 4%, but when the 10-year Treasury comes down to 4 and under, you see more investment in real estate. So that's a positive.
Yeah, that makes a lot of sense. And they're optimistic, right? That's kind of the theme, but they're not without concerns, right? What are the concerns of your respondents?
That's right. Yeah. So, the main concerns that they have are basically rising costs. I mean, they're concerned about the costs of goods, of services, and of capital going up. So, by far and away, the number one concern that people had was interest rates. So rising interest rates was number one. I think there was 83%, it looks like, that indicated that interest rates were the main concern. But if you look at the next set, it's construction costs, inflation, and the cost and availability of property insurance are all in the mid-40s in terms of the concern. And to me, that all essentially clusters around inflation. Construction costs are going to go up because of inflation, maybe because of the tariffs that have been implemented, maybe because of the immigration policies. There might be less workers in the labor force. Property insurance, that's a cost that's going up. You've seen the fires in LA and natural disasters elsewhere, and insurance prices are spiking. So if they have concerns, it's that there are continuing to be rising costs, both to acquire real estate, to own that real estate, and to operate that real estate.
Right, along with these values increases potentially, and the rents increasing, and performance. If your costs are increasing, it can hurt you. Well, what about property types, sectors? What did your respondents feel was the property types with the most promise moving forward?
Yeah, the most promising property types were multifamily, industrial, data centers, and then followed by retail. Which is, we didn't ask the question last year, but 2 years ago we asked the question, and interestingly, it's sort of in line. We had multifamily, industrial, and shopping center retail in 2023. So things haven't changed much, although I think it's interesting to see data centers emerging as their own category. I used to think of data centers as a subset of industrial, but I think they're standing out now as their own standalone investment category that people are excited about. Multifamily, obviously there is a lack of affordable and attainable workforce housing in the U.S. The housing is expensive. With interest rates persisting, it's hard to buy housing. And so I think owners and operators are bullish on multifamily and the ability to rent apartments. And then retail, I think we've seen is that there's now sort of a pent-up demand for retail, and not as much retail space as there is the demand for. I mean, during COVID, there was a clearing out of some retail space, but now there's increasing demand.
Yeah, that makes sense. And we're talking with James O'Brien. He's a partner with Seyfarth about their 2025 real estate market sentiment survey. And one of the questions, another question I thought was really interesting is, what are the factors of these groups when they're deciding to acquire properties in 2025? And what'd they tell you?
Well, pricing remains a top concern, and so that's interesting. That was the same last year, and what that tells me is there's not yet a meeting of the minds on price. You've got buyers and sellers who have different views on what the pricing of assets should be. Last year was a relatively low transaction volume year, and so I think there's still some disagreement in the market about where pricing is. Interest rates are the next concern that they've identified, or the next factor in their decisions to purchase. So pricing, interest rates, and then actually the availability of debt financing. As you well know, real estate's a leveraged business, so most people are acquiring assets using debt. And last year, well, at the end of 2023, some of the major banks were out of the real estate lending business altogether. And last year it was difficult to get loans for some property types. But I think this year there's going to be an easing, but that still remains a factor for people. It's the pricing, it's the interest rates, it's whether or not the capital is going to be available.
Yeah. Yeah, well, those are good points. And one of the sayings I've heard recently that I like regarding decisions to buy commercial real estate are date the rate, marry the deal. It's like, we're seeing activity really pick up on all our assignments, and most of our assignments in the Southeast U.S.
Yep.
But we're seeing activity really pick up, and a lot of these buyers are feeling like, if I can get into lower bases because interest rates are higher, commercial real estate's generally a long-term hold, so might be a good time to get in some properties that maybe otherwise wouldn't be available. For example, I got a $24 million deal, single tenant, that I have it out at 8 cap yesterday, and this would have been a 6.5 cap, just 3 or 4 years ago. So it's like, you can get such a better deal today. It's kind of interesting. I think that maybe why some of the buyers that we see are kind of picking activity, and sellers feeling like maybe interest rates are back to normal historic rates and they're not going to change that much. So maybe values are where values are. Kind of interesting market.
Well, I definitely heard the expression "higher for longer" applied to the interest rates, and that people are willing to live in the higher for longer environment. There was a point where I think people were sitting on the sidelines because they were unsure of where interest rates were going. But that interest rates have come down. There's a signal that they're still going to be coming down. But we're not going to see zero again for a while, or close to zero. So I think people are just figuring out how to pencil out their deals. And I guess in the example you gave, they are lowering the pricing of that asset, so makes it more attractive.
Yeah, I was looking at some old marketing from about 20 years ago where we were converting a large office property from rental to condominium. And I was looking at the marketing piece, and it says, take advantage of the low interest rates. And then I looked at the pro forma we were giving folks, and the interest rates are like 6.25%.
Wow.
If you look historically, maybe we're back really to normal. Well, let's see. Well, and one of the questions that you asked, and I guess it would pertain to just a small number of your group, but are you likely to invest in office to convert to other uses like residential or mixed use?
Yeah. Well, that's an interesting one. That one sort of surprised me because, you've probably heard all the chatter. There's constant talk about how office conversions are going to be the savior of downtown office markets where the office is underutilized. But there is less interest this year in office conversions than there was last year. Trying to see the exact numbers for you. So last year, something like 30% approximately said they were somewhat likely. About 5% said they were likely to invest in conversion projects, and about 60% said they were not likely. So they weren't sort of hot on this product anyway. But now this year in 2025, the not likely at all to invest in conversions has gone to about 70%. And so the appetite is less this year for office conversions amongst our respondents than it was last year, which, like I said, I thought it was a surprise because I see it written about all the time in the media. Yeah. It seems like an exciting topic for people to write about, but it doesn't necessarily seem like something that investors are clamoring for. I think politicians and other stakeholders are excited about this idea because they see sort of a generational opportunity to bring residential product into these downtown markets. But our respondents are telling, I think, through their responses that that's not likely to happen unless there's going to be incentives. So there needs to be maybe tax incentives, zoning changes, changing to the building permitting laws to streamline things, to to make office conversions more viable. At least our clients don't seem as interested in them as we thought that they would be.
Yeah, I agree, and that does need to happen, and I think it is happening in some municipalities. And the politicians, yeah, they like it because they don't have to do it. Actually, they don't have to take the risk. And I
It
think
sounds good when they
yeah,
say that we're going to convert all these kind of empty Class B office
mhm,
buildings into new housing, which we need. So,
mhm,
as a policy matter, it seems like a good idea.
yeah.
But I'm not sure that it pencils out for investors. At least they're skeptical of it right now.
Yeah, I agree, and it has to be the right building to start with, and the right location, and then it's more complicated than building something new. So you also look at that aspect. Is the juice worth the squeeze? Right?
Right. No,
Yeah,
I think in some cases it might actually be more cost effective to tear down a building and put up a new residential building in its place.
yeah, just true. I may be bringing out a building shortly that's really a tall tower in a southeast market. So it'll be interesting to see, are those views interesting to these tenants in that area, and does that create demand? But interesting world. Well, another one of your questions was about AI. And in
Hmm.
commercial real estate, it's kind of the talk of the town, right? And
Hmm.
you asked your respondents, did they use it in 2024? What'd they tell you?
Um, yeah, they said that they did.
Mhm.
That was an interesting question because we asked them both, did they use it and were they planning to use it?
Mhm.
And they said about 33% did use it last year. And I think that when we asked them the question the year before, did they anticipate using it? About 34% said that they did anticipate it. Basically that was in line with expectations. They did adopt AI at the rate that they said they were going to. And this year, I believe it's 59% said that they're likely to use AI this year. So there's a lot of interest in AI. It's another thing that you read about all the time, obviously, in the media, just like office conversions. So there seems to be excitement about it. I mean, I know there's excitement about it fueling, data center investment, for example, because they think there's a lot of servers that are going to be needed to power AI. But it seems like clients are using it for their own businesses as well. I'd be interested to know if it's something that you use in your brokerage business. I mean, we as attorneys are not using AI a ton yet. There's issues with client confidences and the like. We do have an in-house group that's studying how to use AI for document review and things like that we do. But I'd be interested if in your brokerage you're using it.
Yeah, I mean, artificial intelligence, that's the only kind of intelligence I have, James. So, of course, use it. Uh, but it's a fair question. It was one of my New Year's resolutions to really get into it and study and learn it. So I've been taking classes, reading about it, meeting with folks, and yes, we do use it, but it's interesting. It has to be used right, or it's not that helpful. So yes, we're using it, and we plan to use it even more. So one of the questions I like that you asked your respondents was about foreign investment, especially what's going on in the world right now. Their expectations on more or less foreign investment in the U.S. Would they tell you?
Right. So 2024 marked a sort of a low point in foreign investment in the U.S. So couch the response in that framework with that context. So they said that 55% thought that foreign investment would increase at least slightly. 15% thought significantly. But that could be read in the context of there wasn't very much foreign investment last year. But they do anticipate more foreign investment this year. Only 30% thought there would be less foreign investment. I find that a little bit surprising because right now there's a strong dollar, and you think that would discourage foreign investment. If we at the time that the survey was taken in January, I don't think there was an anticipation of a major trade war, which is possible now, I suppose, with some of the tariffs that we've been implementing. But if that were to happen, that would be difficult for foreign investment too. But at the time the survey was taken, what is that, 70% thought that foreign investment was going to increase. So I think that's an interesting result.
Yeah, it is. Another one of your questions I think is interesting is what percentage of your investment portfolio do you allocate for distressed assets? What did they tell you?
Yeah, so there's
What?
not as much interest in distressed assets again as I thought that there would be. That was kind of an interesting takeaway. Um, so the response was that about 40% were going to invest 1 to 10% in distressed assets, and 31% were going to invest none. So those are the top categories. So there's overall lack of interest in distressed assets compared to what I thought there was going to be. Um, and there was a question that we asked, looking back, what percentage of your portfolio did you invest in distressed assets? And it was, I think, 81% invested 10% or less, which was not in line with the survey result last year. There seemed to be like more enthusiasm for distressed assets at the outset of 2024, and then there was less implementation of that strategy in 2004 in reality when we asked them, did they invest in distressed assets? Why that is, it might be just that there was a lack of deal volume in general. And so there was less distressed assets available as well. I also think you had a little bit of the kind of 2008 great financial crisis extend and pretend phenomenon happening last year. Maybe not in exactly the same way, but owners and lenders cooperating and not taking properties to foreclosure or putting them up for short sales and the like, and just letting the owners survive for a little while.
Yeah. Yeah, we're seeing the same thing. We do a lot of work with lenders and helping them with foreclosed properties and helping their borrowers sell properties that are distressed. And we're seeing a little bit of multifamily. Obviously, we're seeing a lot of office. And I think one of the things for buying distress is, when you can get an office building like in a southeast market, a nice building in the $60 a square foot range is going to be interesting to see. I think there's going to be potential windfall profits for some of these groups. And I think it's an amazing time if you're a contrarian investor, to consider office in some markets. Another question that you asked again this year, and I'm just curious how it changed, the respondents changed from last year, was the work from home, the hybrid models, how it's affected their own company. What did they tell you?
Yeah, that was an interesting one too. I'd say we've asked this over, say, the last 3 or 4 years, and the trend has been to, I think, a greater acceptance of work from home. I mean, in general, however, in the real estate space, people are anticipating that their workers are going to be back 4 to 5%. I mean, 4 to 5 days a week. 64% said that they thought their workers would be back 4 to 5 days per week. That was 59% in response to that same question last year. So and they had 31% said that their workers would be back 2 to 3 days per week. 2 to 3 days was 24% last year. So you do see on the one hand an increase in return to office, and I think maybe because the real estate industry knows, and the real estate industry is heavily invested in office, that you need workers in offices to help, prop up the values of those office properties. It's also helpful to retail and central business districts. So the people in real estate seem to value in-office attendance for sure. But at the same time, we asked them about whether or not these models have affected, morale or affected profitability, affected employee loyalty. And that's where you're seeing the trends are improving. The first time we asked this question, most people, I don't think it was like 67% said that, or 67% said that the work from home was not affecting profitability adversely. Now it's 82% saying it's have no adverse effect on profitability. So a strong majority believes that it's not affecting their profitability. I would say, though, that if you look at that, that's still about 20% of respondents think that work from home is hurting their profitability. Mm-hmm. So I wonder if there was any other sort of strategic choice that a company could make, and 20% of the people thought it was bad, whether they'd be implementing that as a choice. But But in general, that number has improved, right? So 67% in 2023 thought it was not hurting profitability. 74% said it wasn't hurting profitability last year, and now it's up to 82% saying it's not hurting profitability.
Well,
Um,
might some of that be because more of their folks are working in the office?
It could be because
Yeah.
if you look at that other question, there is
Mhm.
definitely an increasing expectation of people being in the office more. So maybe if hybrid means one day away from the office as opposed to one day in the office, that's less of an effect on profitability than it might be otherwise.
Yeah. Well, I'm certainly a proponent of work in office and always have been. And I love the morale, the culture, the efficiency. When we've worked with companies that have folks working from home, everything's delayed. It takes longer. Oh, well, let's set up a Zoom meeting and you're working with a group. Like when we're picking buyer groups for our listings and we have multiple buyers, that's part of what we look at because we realize the inefficiency there. Well, we've seen the inefficiency there. When
Yeah.
folks are together, things can really happen. And we also seen a lot of younger folks that really want to be around everyone and learn and grow. And so it's kind of interesting. I think there's more and more companies as well that are kind of figuring it out that is really going to help them in the long run and their employees to get folks back. And I know there's a lot of people that are on the other team that think that it's terrible. And I think the worst thing to me about work from office is the commute. I still
Yeah.
don't care for the commute, but the rest of it I really like. Well, here's the answer to the commute: live close to where you work. How
Oh,
about
there you go.
that?
Maybe there's an
um,
office building near you that's converting to residential you could move
yeah,
into. Yeah.
yeah. There you go. There you go. Well, James, when you look at this survey, and as we've talked about it now, what would you leave our audience to think about for your survey this year?
Well, I think that real estate is a business driven by the fundamentals, and the fundamentals were improving at the end of last year. So there's a lot of optimism out there. I think this is going to be a year of opportunity. There's going to be an uptick in investment. I've seen it. There's been more activity at the beginning of January than often there is in the real estate world. So I think that's all positive. But I do think that we've got to watch current trends and see what some of the new administration's policies might be doing to exacerbate the concerns that people raise, which are inflation and interest rates. So, yeah, if it looks like inflation is ticking back up, or it looks like interest rates are not coming down, there could be there could be a dampening of the enthusiasm for the market. But overall, people are excited and are looking forward to a positive 2025 in real estate.
Well, what do you think of the real estate developer that just recently moved back to DC? How that might impact things?
Yeah, no, I mean, I was at a real estate roundtable event in early January, and I think all of the real estate people there were positive about it. They think that the new administration is essentially going to be pro-growth, lower taxes, less regulation. So all of that's good for the business community, for the real estate industry. And I think given that he is a real estate developer, I think people are positive that he would be sensitive to the concerns of the real estate industry. There was a sense in that meeting that hopefully the administration would be maybe less extreme than their rhetoric might suggest. And right now, I think there's concern as to whether or not that will be borne out to be true or not. He's unpredictable, right? So it seems like we're going to have all these tariffs and maybe a trade war, but then we've decided we're going to postpone the tariffs for a while. So we'll see what happens. Some of the policies could be inflationary and be a drag on the economy and have the Fed tightening its monetary policy, which wouldn't be good. But hopefully the pro-growth policies will win out in the end.
Yeah, me too. James O'Brien, thank you for joining us, sir. We appreciate it.
Yeah, no problem. Great to be with you. Thanks for having me.
Thanks again. And thanks for joining us around the country. And if you'd like to copy the report, you can visit our website, creshow.com or Seyfarth.com. And that's spelled Seyfarth. All right. And yeah, if you need real estate lawyers, they have them all over the country. They also have them in Australia and Asia and Europe. So check them out. And thanks for checking out the show. Thanks for sharing it. Thanks for contacting us. Let us know what you think. Reach out to me if you have any questions or you need a real estate person to do anything law, brokerage, anything anywhere in the country, my email is an easy one. It's michael@bullrealty.com. Until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty, commercial real estate sales, leasing, and advisory services. Visit bullrealty.com or reach out to me directly. My email is michael@bullrealty.com. By ShareFile, designed with real estate and other highly regulated industries in mind, ShareFile offers secure digital solution to simplify workflow and improve collaboration. Visit sharefile.com. By Commercial Agent Success Strategies, 21 cloud-accessed agent training videos. Learn more at commercialagentsuccess.com. You're invited to subscribe to the show wherever you listen or watch the show. You're also invited to subscribe to a weekly email announcing the show topic and guests at creshow.com. Thank you for watching, listening, and sharing America's Commercial Real Estate Show.